Hi, this is Mounika. I'm going to talk about financial inclusion in this video. So, what do I mean by financial inclusion? It's the process of providing access to individuals and businesses to useful and affordable financial products and services that meets their needs like transactions, payments, savings, credit and insurance delivered in a responsible and sustainable way. Now that we understand what is financial inclusion, let us see why it is important though. So, financial inclusion and access to financial services allows families to smooth out their consumption and invest in their future through education and health. And access to such credit enables businesses to expand, create jobs, and help reduce inequality. So, to put it, financial inclusion is the bridge between economic opportunity and outcome. Let us look at some stats now. According to latest Findex 2017 report, 69% of the adults have a bank account or have access to mobile money provider, and still close to 1.7 billion are unbanked. Coming to gender stats, 72% of the men and 65% of the women have a bank account. Now let us look at some stats which can help us bring more people into the formal financial system. Starting with the public sector, digitizing payments to public sector workers, public sector pensions, and government transfers can reduce the unbanked adults by 100 million globally. 230 million private sector workers, unbanked adults, get paid in cash, out of whose 78% has a mobile phone. And out of 235 million people who receive cash payments for the sale of their agricultural products, 59% has a mobile phone. Now, let us look at some more numbers of the people who are already in the system but are not using the available services. 300 million account owners worldwide in the private sector get paid in cash, while 275 million account owners receive cash payments for the sale of their agricultural products. And 280 million account owners in the developing economies use cash or over-the-counter service to send or receive domestic remittances, including 65 million people in India. Now let's look at what World Bank is doing for improving financial inclusion. It has introduced a program, Universal Financial Access by 2020, pledging to contribute to the inclusion of 1 billion people. Many others have made similar pledges, including Visa, MasterCard, and GSMA, 500 million people each, and large mass market-oriented financial institutions like Ant Financial, China, 100 million, Equity Bank, Kenya, 50 million, and Bank Mandiri, Indonesia, 50 million. And associations like the Partnership for Responsible Financial Inclusion, 70 million, and World Savings Bank Institute, 400 million. Now, let us take a look at financial inclusion in Indian context. Though RBI and government schemes pushed Indian adults with bank accounts up to 80%, there are still 190 million unbanked Indian adults. With financial inclusion, we have to talk about its twin pillar, financial literacy. Financial literacy stimulates the demand side, making people aware of what they can demand from financial services. And financial inclusion acts from the supply side, providing the financial market or services of what people demand. Now, let us look at some barriers from the demand and the supply sides. Financial literacy barriers. According to a global survey, 76% of Indian adults do not understand basic financial concepts and are financially illiterate. 66% of population live in rural India, and only about 35% national bank branches are available there. More than 60% are casual workforce with little to no surplus of income. Lack of understanding and trust on the formal financial systems. More than 70% dependent on the informal sources of credit, some on even exploitative money lenders. Barriers to financial inclusion. Banks being far from the village and inconvenient timings. Unavailability of appropriate products and not very friendly or accommodating attitude of staff. Proof of identity and required large number of documents. Low value deposits and high transaction costs. Infrastructure. If long and complex projects are taken, they are prone to risks in policy and other changes. Let's take a look at what RBI has done for financial inclusion. It has introduced National Strategy for Financial Inclusion (NSFI) for India 2019-24. It's an upgradation of the current measures that are available, and it aims at making the financial services available, accessible, and affordable. We'll try and understand features of NFSI: strong digitization, mobile-based delivery of financial services, protection of privacy of users. Increased bank outlets to villages within 5-kilometer radius or a hamlet of 500 households in hilly areas by March 2020. to provide financial products like pension, life insurance, and investment to Pradhan Mantri Jan Dhan Yojana holders by March 2020. Policies targeted towards specific sectors like small and medium businesses, agriculture, or specific reasons such as aspirational districts make consumers understand their rights and responsibilities as clients of financial services. Success of strategies and policies implemented by RBI, banks, and government depend on key aspects like creating cross, easy, and affordable financial products, keeping in mind the all sections of society, and the collaboration between governments, both state and central, RBI, IRDA, SEBI, PFRDA, NHB, financial institutions, and other intermediaries. I want to end this on simple note explaining how financial inclusion helps us in simple terms: savings, borrowing, and emergency funds. Savings in the sense high income economies 71% reported savings, while in developing economies only 43% did. About half of the world's population, adults, reported borrowing money. Better the credit systems, better the borrowing and the deed. High income economies again rely on their savings when in emergency, while the developing economies turn to friends or families or depend on the income from working. On the ending note, I hope most of us agree that better savings or credit systems will help unorganized sectors and poor population of a country to survive through the emergency lockdown and other emergencies as such. Thank you.